Afternoon, everyone. I hope you're all well. It's great to see you all. My name's David Paul. Some very familiar faces in the audience and some people that I haven't seen before. My background is that I have a degree in engineering, MSc in metallurgy, a PhD in applied mathematics, all of which is largely useless in taking money out of markets regularly and consistently, I'm afraid. What I'm going to try and do this afternoon is that I'm going to try and talk about a method of ticking the boxes. A mechanical method that if you tick the boxes and you have the discipline to sit and wait until you can tick all the boxes, until these plums of opportunity come along, then you can push your hit rate to a level that's uncommon in this line of work. Okay. I put on my first trade in October 1982. It was a trade in South African breweries. I was playing professional rugby in Johannesburg at the time. Everybody says you're not big enough, but I always counter that by saying it's not the size of it, it's how angry it gets. Okay, so I played good rugby in Johannesburg. I'm born in Camden Town. Went to school in Northern Ireland, as you can probably hear by the accent, and went to South Africa to play some really good rugby, and I played for Transvaal for quite a few seasons. My biggest gig was in front of 85,000 people at the opening of Ellis Park, so this is nothing, okay? It's quite an undertaking to put this all across in 1 hour, and if we don't get it across in 1 hour, then we're downstairs at our stand for the rest of the afternoon, and I have the Director of Education of VectorVest USA down in the stands who can help us get it all across and answer all your questions. So when you go home, you should be able to successfully outperform the stock market in a few minutes a day. Hard to believe, I know. Okay, so let's get started. I was hoping there was going to be a big screen like that where I did the presentation this morning, but that is not the case. So if you can't see, folks, there's a few seats up around the front here, so don't be the slightest shy. Come on up. You certainly can't see that, but you really don't need to see it because it says that VectorVest is pretty much the only education company stroke stock market software company in the UK that's fully authorized by the FCA. Although I am qualified to give financial advice, I'm not allowed to give financial advice without sitting down with you, sir, and doing a very long and detailed fact find, and the sort of thing that I'm sure your financial advisor has done with you over the years. I'm allowed to talk about what I do myself, but I have to tell you at this stage that although the shares that I'm holding may be appropriate for me, they may not be appropriate for you. So if there's anybody from the FCA in the audience, are we good to go? Okay. We normally get a few. I did a seminar in Scotland the other day, and a little fella from the FCA wandered in and sat at the back for the full seminar. It was quite unnerving, actually. Let's move on. What we're going to talk about is the VectorVest system to actually analyze stocks. We want to find the very, very best stocks, those stocks that are making lots and lots of money. Their earnings per share is rising strongly, and I don't care how many moving averages you put on a chart, the share price is going up the page, not because of that moving average, but because the company's making lots and lots and lots of money. I'm afraid. Nothing upsets me more than somebody saying that the market bounced off a 200-day moving average. That is rubbish. The market does not go to the average goes to the market. So Take that home with you if you're a technician. So the VectorVest system, we're going to be talking about timing the London market. At VectorVest, we believe that you need to know whether the market is rising, whether the market is falling. Everything follows from that. And we don't want to be caught in a situation like 2007 where markets fall by 45%. And if you're like the average person, when it's down 10%, what do you say? Nah, you say, give it another tick. Okay, it's down 15, give it another tick. It's down 25, give it another tick. Right at the bottom, you capitulate and you sell out and you time the low of the market to the second. Does that ever happen to anybody else apart from me? Okay, and many people capitulated right at the bottom on March the 9th, 2009, where they should have been buying in. So if you're down 40%, you've got to make 66% back just to get to break even. Am I sums good? All right. Unfortunately, many people never get back to break even because there's two types of cash. There's two types of capital. One is the loot, and two is the emotional capital. And if you're down 45%, man, it's quite something. And a lot of my friends are financial advisors. They tell me that there's still heaps of money sitting in cash accounts earning 0.25% because the people were so scared in 2008 that they haven't got back into the market. Has that ever happened? Do you know anybody like that? Please don't put hands up. So we're going to be talking about trading price and earnings momentum. And at the end, we've got the secret to success. Okay. So you're good with that? The secret to success right at the end. And it's not what you think. Okay. If you go to a broker that specializes in short-term trading, such as one of the spread betting companies, they will quite easily tell you that 95% of people lose money and 5% of people make money. Have you heard those numbers bandied around? So your job is to get enough experience so that you can put yourself into the 5%. Most people go broke before they can get there. I worked in Chicago for a number of years, and they used to say in Chicago that the average dentist lasts 3 months. A dentist was a sort of a term for a professional, lawyer, accountant, engineer going into leverage markets. So you're going to need 4 things, folks. Unselfishness, determination, courage, and most importantly, cheerfulness in adversity when you have 2 or 3 bad ones in a row. I was taught those in my first job. I was in the position from 18 till I was 22. So that's what you're going to need to make this happen. At the end of today, you could quite easily be like this. You've listened to dozens of presenters, and you've got to find your own way ahead, your own little methodology. For people who are conservative traders, this morning I actually talked about our worry-free methodology, which is a very conservative method of making money in the market. Over the last 20 years, it's grown capital by 17% a year, excluding dividends. What I'm going to talk about this afternoon is something more aggressive than that, a more trading approach, where I think that you should be able to make 30 to 40% a year. It's going to take more time, and it's going to take what I call a little bit more testicular fortitude, if you know what I mean. A little bit more strength to make it happen. It only takes one thing, folks, one little thing. And I've got a quotation from Bruce Lee here. Do you remember Bruce Lee? I fear not the man who's practiced 10,000 kicks once, but I fear the man who's practiced one kick 10,000 times. So you need one little edge, and you need to practice that over and over and over again. And that's what I'm going to try and get across. One thing. And many people say that when trading's going really, really well, it becomes quite boring. You're doing the same thing over and over and over again. And I know a lot of traders who in fact start to lose money because they get bored with what they're doing and they look for a little bit of excitement. Does that ever happen to anybody? Apart from me? Will you start to look for some a little bit of excitement? Pick the odd bottom? In fact, some trading coaches say that you should do that once a month just to get rid of it. Okay? You should do something aggressive like that once a month so that you actually get, it's like the urge to scratch a spot, you can get rid of it. Perfect execution, a maze of techniques out there. You must have heard dozens of them today. I don't want it to take a lot of time, so I'm going to propose a swing trading methodology, certainly not an intraday trading methodology. And to get yourself into that 5%, folks, you need to manage your money really well, which means that you should risk on each trade 1 to 1.5% of your capital on any one trade. Now, that 1 to 1.5% is the amount of cash that you would lose between your entry point and your stop loss. So, if you've got £100,000 in your account, 1% is £1,000. Is that correct? That's the most that you should ever lose in any one single trade. And you need to adjust the number of shares that you buy so that if the share falls from £10 to £9, which is your stop loss, let's say hypothetically, that in that drop you would only lose £1,000. And that's what traders call position sizing. And if you go to my blog, vectorvest.co.uk/blog, I actually wrote about that at length over the last couple of weeks. Position sizing is the number one reason that the 95% fail. They trade too big, they get a couple of bad ones, and they're gone. They don't get enough time to practice their skills so they can push themselves into that top 5% of traders. Don't make that mistake. Has anybody ever traded with a thing called the stochastic indicator here? Designed by a fellow called George Lane. I knew him really well. And old George used to say that the objective of trading is to have enough money to trade tomorrow. Okay? That said, let's look at the VectorVest system. Now, for some of you that were in the presentation this morning, there's a little bit of duplication here. But every investor should know, what's a share really worth? How safe is the earning stream? And some idea, should we be buying this share? Is it rising? Should we be sweating it out because it's going sideways? Or should we be running for cover because it's falling? The first two things are fundamental measures of the company. And the third thing is a technical measure of the company. Now, I define fundamental analysis as the search for the true value of a share. I define technical analysis as the search and the study of trends and turning points. So the first two things are all about value and safety of earnings. The second is about the trend of the market itself. Now, I want to talk about my grandfather. A very, very long time ago, he told me that the only way to make money in anything was to find the value of something and then pay less for it. Very long time ago. He died in August 1968, so it's a very long time ago. I told this story the other night to a VectorVest investment club in London, not the main London group, a subgroup, Ivan. And there was an old fellow there, and he owns a watch shop close to St. Paul's, second-hand watches on Ludgate Hill. Shrewd old bugger. He said that I'd been doing that for the last 50 years in Rolexes. He trades in second-hand Rolexes. And he says he does exactly that. He knows exactly, somebody brings a Rolex in, a used Rolex in, he knows exactly what it's worth, and he bids them less for it. Simple as that. Whether you're in used cars, don't matter what you're in, that's how to make some money. Property. If you've read The Intelligent Investor by Benjamin Graham, Warren Buffett's mentor, there's 12 chapters in it. The first 10 chapters, he shows you how to put a value in an asset. The last 2 chapters, he says, wait until Mr. Market does something dumb so you can get it cheap. So, what's a share really worth? How safe is it? When to buy, sell, or hold? So now you've got to think. Are you ready to think for a few minutes? Every evening, VectorVest puts a value to every share in the market. To do that, the algorithm is 28 years old, put together by Dr. Bartolito over the last 28 years. It looks at the balance sheet, the income statement, the cash flow statement, all the financial ratios. We buy the data from Thomson Reuters for every company on the market. It also encompasses an earnings forecast that we also buy from Thomson Reuters. It sucks that all in and spits out a valuation for every company on the market. So at a glance, and we can certainly search for it, we can find in seconds all of the companies on the London stock market on AIM that are trading below our valuation. And we favor shares that are trading below our valuation. In exactly the same way as the fellow who trades the Rolexes makes money in the Rolexes. Now, another measure of value is relative value. And in relative value, we take a measure of the earnings upside over 3 years into the future. So we forecast the earnings of every share on the market for the next 3 years. We make the following assumption. We assume that those earnings are going to be discounted into the price at some time over the next 3 years, not when. We calculate a projected price. We take the projected price and we subtract the price today to calculate the upside. And we divide the upside by what a AAA rated corporate bond will pay over the next 3 years. If your share has a relative value of 1.4, that means that we believe the share is going to outperform a corporate bond by 40% over the next 3 years. Anything above 1.3 is classed as excellent. We have shares in the London market, ladies and gentlemen, with a relative value of 1.6. And the top share, Games Workshop, has got a very high relative value, and it's been galloping up the page. I firmly believe that relative value is the most important number in VectorVest if you are a momentum-based trader. It drives the share price. I don't like to be involved in shares that have a relative value under 1.3. Okay? So, our first 2 measurements are value and relative value. The second metric is called relative safety, which measures, as the slide says, the consistency and the predictability of the earnings. Again, we look at the balance sheet, the income statement, the cash flow statement, all those ghastly financial ratios. Maybe you accountants love them, but I still find them ghastly. It spits out a number which measures the consistency and the predictability of the financial performance on a scale between 0 and 3. Above 1, good. The further above 1, the better. Now, if you're a very conservative investor, you would want to push up the relative safety because that will reduce the probability of surprises. And this morning when I talked about our worry-free methodology, we actually only look at shares with very high relative safeties. This afternoon, we're actually going to look at more momentum shares, and I'm quite happy to be involved in a share. Bye-bye now. You don't know what you're missing, lad. Okay. I'm quite happy. I don't care when the men leave, but if the ladies leave, it'll drive a dagger into my heart, so please don't. Okay? On momentum shares, I'm quite happy to be on board as long as the relative safety is above 1. Okay? So basically, I'm looking for a share that's undervalued. I want a high RV, the bigger the better, and I want a relative safety that's greater than 1. And the third VectorVest measurement is relative timing, which measures the trend. On a scale between 0 and 2, if the relative timing is above 1, the share is rising. The further above 1, the faster it's rising. And then what Bartolito did is he put these together into the master indicator VST, value, safety, and trend. And thus, for the very first time in my career, I saw one number that encompassed both fundamental analysis and technical analysis. And that's quite something. Because if you go to an investment meeting, invariably the fundamental analysts will be on one side of the room. Yeah? The technical analysts will be on the other side of the room. The technical analyst believes that the fundamental analyst is reacting to numbers that are probably 6 months out of date. The fundamental analyst thinks that the technical analyst is reading the tea leaves. So there's not a lot of common ground there, and they rarely speak until the second drink, and then they throw abuse at each other for the rest of the evening. So here was this pragmatic character, Bartolini, who's got a PhD in chemical engineering, and he said that I don't care about this. I pragmatically want to try and make some money and cut through this dogma. Those of you that have seen me on Core Finance, my dear friend Zach interviews me at Core Finance, or it used to be called Tip TV. Zach Meir, some of you may know him, and Zach says that VectorVest is the best of both worlds. What we're trying to do is to put the best of technical analysis together with the best of fundamental analysis to pragmatically make some cash. Many of you in this room, of course, are not in the market to make money. You're in the market to solve a puzzle. You may just think about that. Okay. Especially the engineers. We put a stop loss to every share in the market every single day. Stop loss is quite sexy in that it's based around a 65-day moving average, but it is adjusted for the fundamentals. If the fundamentals of the share are good, we widen the stop loss to give the share enough more wiggle room. So we want to do our best to allow a really good share to move up the page without getting stopped out in it. And that's quite a fine line to tread. There's a wonderful book out there called Reminiscences of a Stock Operator. Has anybody read it? By Edwin Lefebvre. Just a cracking book. And in the book, Edwin Lefebvre says about his trader, Jesse Livermore. It's called Larry Livingstone in the book. And he says that the money's not made by the thinking, the money's made by the sitting. He also says in the book, Ladies with Chauvinistic Age, he said that those men that can be right and sit are uncommon. Some great lines. So your job is to find a share that's undervalued, that's growing its earnings aggressively, that's breaking up the page on a buy recommendation, and to sit and let it run up the page on a buy recommendation. And that sitting is quite difficult. Quite difficult. If you haven't traded, you don't understand how difficult it is to sit in a winning position. And we have this tendency to snap at those winners. And that's a part of my secret in a few minutes. So a very sexy stop loss that does its best to keep us in winning trades and at the same time protects our capital. We put a buy, sell, or hold to every share in the market every single day. Now, I do an awful lot of charting myself, and I like charts. I've been looking at charts for a lifetime. But with VectorVest, you don't need to have any charting skills because the program will alert you to when a hold changes to a buy, that's a great buy signal, and when a hold changes to a sell, where you should be scarpering for cover. So you don't need to have any chart reading skills to make a success with VectorVest. All that's done for you. But certainly those of you that have spent years cutting your teeth in charts, you can add that to the mix. Who are the technical analysts here? Must be a room full of them. No? No? You don't like technicals? Okay. So it is our philosophy that we want to find shares that are undervalued, growing their earnings aggressively and safely, that are rising on a buy recommendation. And folks, we want to buy them when the general market is rising. And the most important thing to understand is the market going up or down? As I said earlier, everything follows from that. So the secret to making money is by rising shares in rising markets. And if you've got the stomach to sell something you haven't got, to actually sell falling shares in falling markets. It's the concept of shorting the market. Until you're making money consistently, buying shares at £10, selling them at 15, forget about the shorting side. We've been timing markets at VectorVest for a very long time. We've got long-term systems for investors and short-term systems for traders. And I'm going to talk about a short-term system and a long-term system this afternoon. We have 3 systems in between them that I'm not going to get time to get onto. They're totally subjective. There's no head scratching or scratching whatever part of your anatomy you've got to scratch to make a decision. They're there, hard and fast signals that do not repaint. A lifetime ago in South Africa, I got the agency for an American stock market program. I thought I was going to get rich in a week because it had these wonderful green and red signals. Right at the bottom, right at the top. So I got really excited. The next green signal I got, I bought. 3 days later, the green signal disappeared. It was repainting the signals as the data came in. Okay, so that does not happen in VectorVest. When you get a signal, it's there, good, bad, or indifferent. It does not change, no repainting. So absolutely no subjective. Now, the market timing signals are based on the VectorVest composite. Now, the VectorVest composite, ladies and gentlemen, is an equally weighted index of all of the shares that we follow on the London stock market on AIM and on AIM. 2,200 shares. It's equally weighted because we believe that an equally weighted index represents the sentiment of the market much, much better than a market cap weighted index. So we look at the price of the VectorVest composite. We look at the momentum or the RT of the VectorVest composite, and we look at the breadth of the VectorVest composite as measured by the proprietary VectorVest buy-sell ratio. Remember, every night we assign a buy, sell, or a hold to every share in the market. So we calculate the number of shares that are on a buy divided by the number of shares that are on a sell to calculate the breadth of the market advance. We have a short-term system and a long-term system. And as I write, in fact, the short-term trend, as I wrote this, the short-term trend on the London stock market was up, and the longer-term trend was up. And that's summarized in 2 words that you can see on the front page of VectorVest, which is on your phone these days. There's a really sexy app for the Android phone and for the iPhone. So you don't have to be sitting in front of a computer. You can have a look at it in a coffee shop. An up situation means that the short-term trend is up and the longer-term trend is up. The short-term trend is reported on the front page of VectorVest with the little traffic light. And as you can see, when I did this, which is the day before yesterday, that the pointer was in the green, and although you probably can't read it there, the caption says VectorVest represents buying safe, undervalued stocks that are rising in price at this time. So it tells you exactly what to do. You can't see it here, but the green tells us we're in an up situation. The primary wave or the short-term trend is up, the longer-term trend is up. And folks, you need to keep your eye on that at least a couple of times a week. And it's on your phone, there's no excuses. So if you all got 10 or 15 minutes a week to keep your eye on what the market is doing, yeah? What's the alternatives of getting rich? Born with it? Marry it? Property? Start your own business? You're going to keep that in control in 10 minutes a week, yeah? Lord Sugar says so beautifully that starting your own business is as close as a man can get to having a baby. Okay? So there's not that many alternatives out there, but you need 10 or 15 minutes a day to keep this under control. Simple as that. It takes focus. So as I wrote this, the short-term trend of the market is up, the long-term trend of the market is up, and VectorVest recommends buying shares. This is the VectorVest composite. I'm not sure whether you can see it from where you are, but that's the VectorVest composite since the start of 2016. And with any luck, you should see the red and the green triangles. And those are our measure of the long-term trend. And those are put on the chart totally and utterly objectively. No input required. So when you get one of those green signals, the long-term trend of the London market is up, and you want to be fully invested. When you see a red signal, the market is falling, and you want to be careful. Now, for the last 5 or 6 years, the sell signals have been non-events. Okay, we've been in a bull market. The sell signals have come down for a day or two, a week or two, and then away it went again. But sooner or later, ladies and gentlemen, there will be a Lehman's moment, sooner or later, so that when you see a red signal, 1, don't buy anymore, right? 2, watch the stop losses in the shares that you've got carefully, yeah? 3, weed out non-performers, yeah? Have a look at those shares that have done nothing in the last run-up. If they've done nothing in the last run-up, there's a fat chance, I think, of them doing anything when the market falls. And my 4th is my favorite. You just sing and hum a little Bob Marley. Don't worry about a thing. Every little thing's going to be all right. I wouldn't have got through a divorce without Bob Marley. Okay? So when you see a red signal, it's time to be careful. Okay. That's the time to short. Somebody asked me about shorting earlier on. If you've got the stomach to sell something you haven't got, then there could be shorting opportunities when you've got a red signal. Maybe short the index. Those of you that are more sophisticated could buy some insurance in the terms of an inverse ETF. But for most of us, it's a time just to be careful. Now, quite frequently in the summertime, you get a little bit of whip. And as you can see, we got a signal to sell on the 4th of July. By the 19th of July, that signal had turned again. We got another signal to sell. And a few days ago, we got a signal to buy. So the long-term trend of the market is up at the moment. In those last little 2 pullbacks, none of the shares that I hold even came anywhere close to their stop losses. And in the words of a rugby commentator of my youth, does anybody remember Bill McLaren? The ball is in, the game is on. Remember that? Never forget that. The ball is in, the game is on. So, trend is up. How far is it going to go? We don't know. We really don't know. All we can say is that in both the UK and in the USA, the market is trending up exceptionally strongly, and the breadth of the market is getting wider. There's more shares moving on to a buy recommendation than a sell recommendation. Politically, North Korea seems to have gone. I don't know what's happening there, but it looks exceptionally strong to me. And all I can say is that I'm fully invested. But if I see a red signal here, then I shall become careful again. Simple as that. Our job is to stay in the moment, to focus on what's happening now. And now, the trend is up. Your moment as an end-of-day trader is this daily bar in relation to your rules. Don't allow your mind the luxury of moving to the future or the past. A PCU. You know what a PCU is? It's a past cock-up. And of course, your mind can move to the future where you have an FCU, and FCU means future cock-up, unless you get other ideas. Keep your mind focused in this moment in relation to your trading rules. Focus on perfect execution of this one trade. In the same way as the richest dentist in your area who drives the biggest car and lives in the biggest house focuses on perfect execution of this one root canal. God bless him. All day. So at the moment the game is on. So let's have a look and trying to put all the pieces together, folks. Victoria is a share that I hold. I've been talking about it for years. If you on my blog on Core Finance, or it used to be called Tip TV. The green line above the candle chart is our valuation. The blue line in the window below the price is earnings per share growth. And I like to see earnings per share growth moving up from the bottom left to the top right of the screen. And you actually can't see that, but I always like to see that earnings per share is growing at least at a 15% clip, and I would prefer a 20% clip. We'll look at the exact numbers for our tick the boxes in a moment. I want to see the share trading below the VectorVest valuation. And then, in the absence of any chart reading skills, I want to buy the darn thing when the hold recommendation changes to the buy recommendation, which was just here, just there. And it's still on a buy recommendation now. Since I did this for these people, this is up near £7 now. There was a buy recommendation. The first one was just there. The stop loss wasn't hit on the whole way up the page, although I haven't put the stop loss in. So on this particular share, it's undervalued, it's growing its earnings strongly, and it's moved on to a buy recommendation. And for most of that time, the London market was moving up. And that's what I'm looking for. Very simple stuff. Undervalued, growing earnings strongly, breaks up, and the hold recommendation goes to a buy. And that's what we need to focus on. That's my one trick. And if I had any strength at all, I would start my own fund. I spoke to Neil Woodford about it, and he told me that I would need £100 million under management before I could actually make a profit with all the compliance stuff that goes on these days. And that's quite a big number to raise. This is Coates. Now, Coates is undervalued. I'll show you how to find these in a second. Earnings per share is growing. My first entry here, it was on a buy recommendation right off the end of this chart, before the start of the chart, but I didn't have enough money to buy it. Have you ever been in a position where you want to buy something and you haven't got any money left? Has that ever happened to anybody? Okay, so I didn't have any money there, but I had sold something else, and where it broke up through that last old high, and you can search for that on VectorVest, and it was on a buy recommendation, it was undervalued, the general market was rising, and that was a buy. And I bought it there, I added to it when it moved from this hold to buy here, and I added to it the other day. So I'm now 3 times bigger in Coates than I was when I started. Ladies and gentlemen, the way to wealth is being able to do what most people cannot do. And I assure you that most people cannot sit in positions. They'll buy a share at £10 and they'll sell at £10.25. I was right. Your job is to let them run. The VectorVest stop loss is really good at that. Lets them run. And if you've got the testicular fortitude, is to add to winners, to build a position. Can you do that, sir? Do you add to winners? Okay. Push, the gamblers call it. To know when to push, when you're on a streak. Who gambles here? Any gamblers? I've got a perfect simulation of the stock market on a craps table. It's a great game. You ever played any craps? It's a great game. The 7 comes up 1 in 6 dice rolls. I've seen the 7 disappear for 200 dice rolls. The table is trending, and you got to push. You got to push bigger and bigger and bigger. Oh, I love the craps game. It's a great game. The sucker bets in the middle, but it's a great game. There's only 2 craps tables in the whole of London. Okay, in the whole of London. Coats, 3 times bigger and adding to the position. Now, sooner or later, ladies and gentlemen, these two will come together. But I think Coates has got a long run in it yet, a recovery stock. I'm sure you must remember your granny sewing. There's a good chance she was sewing with a Coates spool of thread. Okay? And that's the basic methodology that we want to use at VectorVest. This is Countryside Properties. Countryside Properties, again, it's the model. That's my one kick. All you need is one thing and do it well. Undervalued stock, earnings per share rising, and the damn thing goes on to a buy recommendation as it broke up through those highs. You had to buy it there. That's it. It flew up the page, and then it went sideways. Now, if you are a technician, you will know that that is what technicians call a bull flag. And it came out of that the other day, and it's now on a buy recommendation again, and I think that Countryside Properties is going to motor up the page. That share may be suitable for me, but it may not be suitable for you, Mr. If the FCA is in the room. Okay? I am in, but it may not be suitable for you. I have to say that. Okay? But it looks to me as if that share wants to move up the page, and I am in. And that is the model, folks. Now, we have user groups around the country, and in Birmingham, any Birmingham people here? We have a wonderful user group in Birmingham, run by a gentleman called Victor Smith, and you get a great deal of confidence as you walk into the user group because Victor's Daimler, which is about the size of between here and the door, with VS007 as a registration plate, gives you a tremendous amount of confidence that the man knows what he's talking about. Victor is leading our competition at the moment. Am I correct there, guys? He's leading the competition. And Victor gets out. When it goes on to a buy, when he sees it going from a buy to a hold, he runs. He gets out. He's not prepared to sit through this consolidation. So if you want to be very aggressive and trade a lot, then you can get out. You don't have to sit through the holds. What I'm trying to do is to try and take the run, sit through the hold, and then add as it moves up. And now I'm twice as big as I was in Countryside Properties at the start. I like to be 3 times bigger when I'm right than I am when I'm wrong. And that takes an awful lot of work to get that right. In a room like this, it seems straightforward. Big deal, just add to it. But I assure you that when you buy a share at £10 and the darn thing goes to £10.25, there's going to be a little devil on your shoulder. Okay. You know what it's going to be saying? Take the money, take the money, take the money. Am I correct, those of you that have traded? What do you think, sir? You don't think so? Not for you. Well, that's wonderful. Well done. Then you're well ahead of the crew. Okay. Most people snap at their winners. Most people snap at their winners. So Countryside Properties to me looks as if it's going to run up the page, and that's my basic model, folks. So Games Workshop, you little beauty. Since I've done this, it's galloped up the page. Okay, it's our top VST stock. And it went on to a buy recommendation here. It's undervalued, growing earnings like hell. It went on to a buy recommendation at 11, and it's still running up the page. at the Oxford User Group, correct me if I'm wrong, we were worried by buying into it here, and the darn thing just kept on going. Okay, so that's been really good. Okay, that's the perfect VectorVest model. Undervalued, growing earnings strongly, breaking up on a buy recommendation. No charting required. So, my boxes. I favor undervalued shares. I want to see a share that's trading below the VectorVest valuation. And to understand that, you just think of that short little fella in St. Paul's trading in his Rolexes. Do you remember that story? For 50 years, he's been making money trading in Rolexes because he knows the only way to make money in anything is to find the value of something and pay less for it, and he's damn good at valuing a Rolex. Short little fella that would be very easy to underestimate. If you need a Rolex, I can probably get you a good price. All right? The RV is greater than 1. Sorry, RV is greater than 1.3. The bigger, the better. It drives the share price. It's strongly related to earnings per share growth. And Benjamin Graham, Warren Buffett's mentor, said that earnings per share growth is the engine that drives the share price. It is not your moving averages or MACDs that drive the share price up the page. It's because the company's making a heap of money and growing earnings. That's why it goes up the page. Okay. Most of the city analysts, if you mentioned a MACD to them, would think it's a pub around the corner. They have no idea of charting whatsoever. They're purely fundamentally orientated. I want the RS to be greater than 1. I like to see GRD on VectorVest is earnings growth rate. And I like to see the earnings growth rate above 15%. And on the UK market, you can easily put that up to 20 and 25. And I don't know, many people are negative about Brexit. My word, there's a tremendous amount of opportunity in the UK market at the minute. Tremendous amount of opportunity. The share is on a buy recommendation and is breaking new highs. I want the long-term trend of the market to be up. In other words, I've got one of those green triangles on the VectorVest composite, and I want the little pointer on the front page of VectorVest to be in the green. In other words, the short-term trend of the London market is up, and the long-term trend of the London market is up. And those are the 7 boxes. If you tick those boxes, you should be getting towards an 80% hit rate. If you can make twice as much when you're right as you lose when you're wrong, you're going to be well ahead of the game. But if you can add to winners and find 3 or 4 out of the 8 that fly up the page like a Coates or a Games Workshop, and you've got the strength to add to those, then you can print money. Okay. And that's the objective of the exercise. Now, on VectorVest, we have got a tool called UniSearch, which can find these things for you automatically. And I can actually, and you can see absolutely nothing there, but at least I can see nothing. You can put in a parameter that the price is greater than the value, that the RS is greater than 1.3, the RV is greater than 1.3, the RS is greater than 1, the growth rate is greater than 15%, and that the stock is on a buy recommendation. And that will find you all the shares in the market that fit those criteria easily with one click. We have a back tester on the product, and you can go back for years and test this going forward so that you can make sure that the thing is for you. But you do not need to make it complicated, but you need to have the discipline to tick the boxes. Because, folks, unless you get a system that you can make an awful lot of money with a 50% system. But very few people could trade it, because in a 50% system, you get long runs of losers. And those long runs of losers will just cause you to give up. Okay, soul destroying. Absolute soul destroying. When you push your hit rate up, the probability of a string of losers goes away, and I won't bore you with the mathematics. And the whole thing becomes light and easy. We've got one of the biggest shareholders in Kazakhstan Minerals in the back of the room here. Proud VectorVest user. He's been adding to CAS the whole way up the page. He's been in Florida for a month on his holiday, spending his loot. Okay, so adding to winners is really cool, folks. So, and you can find those, and Kaz is there somewhere, although I can't see a thing without my glasses, which I haven't got on at the minute. The secret to success. Are you ready for it? Get your pencils out. I'm going to talk about a loser first, the 95% that get this wrong. A loser becomes pessimistic when they have a winner. They become pessimistic as they feel the market is going to snatch away their profits. And they end up snapping at a small profit. That's bad enough. But the loser also invariably becomes optimistic when he has a losing trade. It's going to turn. Give it another tick. So, on your next trade, ladies and gentlemen, your next investment, I want you to do something quasi-spiritual. I want you to, in fact, become the observer of your thoughts. To, as the spiritual people say, to invoke the silent watcher. And just observe what you're thinking. Because in our research that I did with my trading partner, a guy called Tom Hogarth, we found that the 95% of people who lose, in fact, think like this. And it's a very simple mind switch that doesn't take that much practice to put you into the 5%. Because to get into the 5%, a winner becomes optimistic when in a winning trade, and he becomes, and I use male, becomes very pessimistic in a losing trade. And a simple mind shift is all that it takes to print money. So the very first step is to become aware of your thoughts and practice changing them. So I think the first thing that you need to find is a trading methodology that makes an awful lot more money when it's right than it loses when it's wrong. And the 7 steps method that I've very quickly outlined this afternoon will do that for you without a great deal of effort. It's been proven on 5 continents of the world. It's going to take you a few minutes a day. And especially if you can add to positions, you will print money. When you're in your first winning trade, you need to become very aware of your thoughts. Okay? And be honest. And what are your thoughts like when your share is now, you bought it at £10, it's now at £10.30. What are you thinking? Are you optimistic, or are you petrified that some sod is going to take your 30p away? Are you? Are you sure? Okay. You buy a share at £10, it falls to 9. Your VectorVest stop loss is 880, let's say, and it falls to 875. It closes below the stop loss. Oh, it's got great fundamentals. I know the bloke who runs it. Know him. I had a beer with him last week. Let's give it another day. So, unfortunately, it's very easy to become pessimistic when you've got a winner, and very easy to become optimistic when you've got a loser. And we analyzed 100,000 trades, and we found that the 95% of people that were losing money were making that mistake. And as far as I'm concerned, that's the secret of success. Okay, so you need to think about that. If I were to give you a book to think about that, I think that you should think about reading Trading in the Zone by Mark Douglas. I think you should also download a free little book off the internet. It's called Zen in the Markets by my dear friend Eddie Topple, R.I.P. It's free on the internet, okay? It'll show you how to actually focus in this moment. So ladies and gentlemen, the VectorVest system, we offer it on a 5-week trial for £5.95. That includes VectorVest UK, VectorVest USA. At the end of the 5 weeks, it's invoiced at £44 a month. It's on a month-by-month basis. If we can't make you money and you're not happy, then you can stop it at any time. So I don't think I can be fairer than that. It's been proven in every country around the world, and we have the Director of Education of VectorVest, Ray Clark, on the stand downstairs. If you want to come down, then we'll give you a full demo of the product, but you've got 5 weeks to make sure it's for you. Okay. Just remember to tick the boxes. Don't go in with the guns blazing, okay? You need a little bit of discipline in this business, okay? Thanks very much for your attention. It's been great to see you all. And if I can answer any questions, we'll be down on the stand downstairs. Thank you very much.